Okay, let me ask you something. When's the last time you saw a streaming service raise prices and actually gain subscribers? Because Starz just pulled off that near impossible trick. They hiked their monthly fee to $11.99, and instead of a mass exodus, CEO Jeff Hirsch says people are still signing up. That's like raising the price of concert tickets and then selling out the next show. What's going on here? Let's unpack this. First off, Starz isn't giving exact subscriber numbers anymore, which is suspicious but understandable in the post-Netflix era where transparency can be a liability. But here's the kicker, they ended 2025 with 17.6 million subs, and Hirsch claims growth continued into Q2. Now, I'll admit, a $12 per month price tag isn't exactly breaking wallets compared to HBO or Disney+, but usually even a $1 increase causes some friction. So why are people shrugging off the hike? My guess. Either their core audience, Power franchise fans, is fiercely loyal, or the price bump was so small people didn't even notice it next to their cable bills. Either way, this feels like a case study in value perception 101. Now, the financials are a mixed bag. Revenue dipped 4% YoY to $307.9 million, but that's skewed by a $147 million charge from ditching Universal's post-Pay 1 deal. Here's where it gets smart. Hirsch argues losing Universal's catalog shows they hadn't ad in 18 months anyway, freed up cash to reinvest in cheaper library content. Translation: they're cutting date weight and focusing on what actually drives engagement. And that engagement metric? Second highest in Starz history. So while the headline numbers look shaky, the underlying health seems solid. It's like seeing a company with a bad credit score but killer product sales. Sometimes the balance sheet lies. Then there's the Netflix deal for the first 4 Power series. On the surface, this feels like a Hail Mary to reach new audiences. But here's the twist, Starz keeps all sequels and spin-offs. That's brilliant. They're letting Netflix do the heavy lifting of introducing Power to casual viewers while hoarding the future cash cows. It's the streaming equivalent of loaning out your textbook to a friend. You get the exposure, they pay for the wear and tear. And speaking of strategy, check out Fightland, their new boxing series. At $2.5 million per episode, it's dirt cheap compared to Lionsgate's bloated budgets. Hirsch even called it lower churn, higher lifetime value, so they're prioritizing affordable content that keeps people subscribed instead of flashy bombs that vanish after one season. But let's zoom out. This whole move feels like a rejection of the prestige TV arms race. While everyone else is blowing millions on A-list actors and VFX-heavy duds, Starz is doubling down on good enough content that doesn't scare off their demo. It's not about winning Emmys, it's about keeping the lights on. And in a market where even Netflix is sweating, maybe that's the smarter play. The real question is whether this strategy scales. Can you build a lasting brand on mid-budget shows and nostalgia plays? Or are they just delaying the inevitable? I'm leaning towards smart pivot here. Streaming's golden age was unsustainable, and Starz might be the first to admit it. What do you think? Is this the future of streaming, cheaper, leaner, and ruthlessly pragmatic? Smash the comments and let's argue about it.